The only thing I see, and I put up the chart of Boeing here as I'm looking through a whole bunch of stuff, uh, would be a scalping short under these lows right here. Since it is still trading below yesterday's close and today's open, it's down on the day. It's kind of hanging right here. The market is.
Hey, Greg, since I got you on telephone right now, and they can listen. So I hit the share button. How do I get that link? I saved it to my hard drive, but where do I get the link on this?
It pops up from your taskbar and then it goes away. So it's not on your hard drive. It's on that website, whatever it's called. I forget. It just pops up from your taskbar for 10 seconds or so, and then it goes back down unless it's in your maybe messages, that little message.
But you have to play it to make that little thing pop up?
Nope.
Okay.
Happens automatically.
All right. Well, I'll figure it out.
Check your messages, that little message box to the right of your date and time. Maybe it's in there. The link.
Oh, yeah, it did pop up, but I was too slow. It said get link. All right, it'll come up again.
Okay.
All right, Q's and spiders holding these prior lows, but unless we get a nice reversal bar, I'm not biting.
I wouldn't do anything here.
Yeah, no.
Unless you're a counter trend trader, scalper. I mean, this could be a low point, and that's fine as long as you're willing to put a stop under this recent low here.
Well, and I'm just talking out loud about the picture of the movie that I would like to see. And it would be a nice wide range bar deep into the 15-minute chart, followed by less than Oh, screencast. There it is. Come on, get link. All right, screencast just popped up. Followed by less than 50% retracement with a bullish 2 and 5 minute. Yeah, screencast.com. There you are. There you go. And then you hit share. Okay. Copy. All right, that did it. All right, there you go. That's what we just recorded. Hey, Dan, that is funny. And, you know, I lived in Irvine running Greg's office for 7.5 years. And one of our clients, actually, who took all our stuff in the advanced lab and this and that, his wife, you know, big hobnob person, owns the La Jolla tennis and yeah, you know, whatever it's called, tennis and yacht club, whatever. There was right on the ocean, and they invited me to Del Mar racetrack on opening day. You know, many years ago. It's a fantastic park there. Wow, low failed. Look at that. And Greg, just, you know, an interesting point, Greg, since I have this condo and I've spent some time in Lowe's and Home Depot this week, much to my dismay. I hate shopping. I've noticed that those two stores have not been very busy. I was in Lowe's yesterday at 6:30 in the, well, that's a bad example, but because of the time of day. But I was walking around saying they were a whole lot more crowded 10 years ago.
Maybe people are buying their 2x4s from Amazon. I don't know.
I was kind of thinking a little bit bigger picture that we've had a 9-year bull rally in housing, right? So, you know, there's surely been a lot of remodels, which supports their, you know, robust rally on the monthly chart. So maybe, you know, fundamentally, maybe they are getting tired because they're priced for perfection.
I was filled on that Boeing. I'm only going to give it $1 risk here, which might be a little tight, but you know, market being where it is, so far it's still weak. Can't get off the mat here, but and this is a little sell setup on the hourly here. So we'll see if it can fall. And disregard the moving averages on the hourly chart. Just wanted to show you that.
So did you all like that lesson on bold? I'm surprised there's no comments. I mean, there's a lot of comments that I made in there. Like if you were in my class, that would have been a you know, quiz for you. I'm like, here's a scenario. Here's this. Tell me what's going on. Write me an essay. I made my students work hard, but they learned a lot.
You're welcome, George. George talking about the replay from yesterday. I spent my doldrums time adding little entertaining comments to it. Go by entertaining and informative. kind of adds to the replay watching that. I held myself back, Dan, from adding one of my own comments about an option trader's sense of humor, where you talked about Greeks and not Greek people.
Right. So, David, all right, yeah, thanks for the compliment, David. But in terms of the Intuit David, that's a different David. And even though I've been to Italy many times, my pronunciation is not as great. So I'm not going to even try to pronounce your last name, Italian Dan. So I'm not going to even try. But so Intuit, we had a nice wide range bar breakout on Tuesday. So that's bullish. The last 2 days were bullish, provided you could have got a bullish entry on an intraday chart and or trading over the high. But we're now breaking down with the market deeper into that wide range bar. You're also talking May 18 for a bullish put spread. That's, a month out. No way would I be doing anything bullish for a month out. I need more data, both on the market, the stock. So just keep it on your watch list, but no way would I enter this right now. And we got to see where the spiders and the broader market indices are going to stabilize and turn bullish. And at that point in time, I'm going to pull out my old tricks of selling out of the money expensive spider puts. You know the drill. I'll be, drilling them, no pun intended, on multiple expirations, Monday, Wednesday, Fridays for next week. And then we can go on a shopping spree of looking for bullish put spread setups. But no, I'm not doing anything bullish right now with the market falling. But even if I did, it would be a day trade only. Just patience. We're preserving capital. I've had a good run. The last 10 days and the last 3 days have been, boring for me on the trading front. And then I'm preserving capital. Again, it's the hunter. You go hunting, and you have to wait for your setup. And there's so many analogies. So the pro baseball player, does he sit there and swing at everything? No, he waits for his pitch that he's seen thousands of times. Yeah, that's a nice wide range bar. Down to new lows. Transport's new low. Look at Apple new low, Google new low, Facebook new low, Netflix tanking. All the fangs are tanking, every single one. And
put the tanking in perspective.
No, correct. I got on the my FANG stocks. I'm looking at 15-minute charts across the board, but they're all ugly, every single one of them, on a 15-minute chart. And that's what's, you can't have the 5 FANG stocks. I don't know what percent of the Qs they represent, but it's a pretty big number, just those 5 stocks. And the Qs, it's mathematically impossible for them to hold up with those 5 stocks making new lows. Now, I held off on this GT from the morning, and see that. Well, let me type it. Remember this morning we were looking at GTLS. And I just didn't like, and, we talked about a half lot or full lot, share size properly. And just because of the market weakness, that's kind of my starting point. I like to trade with the broader markets unless something is genuinely on its own page. And then that's unique because I'm it's counter to the mothership, I call it. The broader indices are the mothership. But I'll keep it on my list for next week.
Look at Bowie. Drop, baby.
Very nice. Yeah, good observation, Dan. You know, the tick, so I'm glad you're watching that. But do I think that's the low of the day? No. And the reason is it's because of the wide range bar from the spiders and Qs 15-minute failed double bottom. So I like the tick extreme setting out a short-term low after a steady sell-off of the spiders. See the difference? Because then it's a capitulation where this might be an igniting move lower with power, with horsepower behind the tick of selling. Hey, Greg, I don't know how often you look at the swing internals intraday, but what's your take on the swing internals for a turning point?
I don't look at them much intraday. But,
Okay.
Actually, you know, you can see them here in the screen that I'm showing now.
Mm-hmm.
You know, based on the move up, this move to the zero or near the zero line on the breath, that move up and a pullback within a move up, that pullback to the zero line is typically where the market will reverse the next day. So that is in an uptrend anyway. And I wouldn't really call this a solid uptrend yet, looking at these spiders. But, this upward move here, the breath was able to get to somewhat of an extreme. It got there over 100. I mean, really bullish would have been it would have got to 200. But in any event, you can see as I click it there, right at the high of the move, which was in alignment with those overlapping bars that we talked about, that started the pullback. Now, if this move up is, really has some power, meaning buyers really want to take control here, historically, this breath internal is going to stop in the area of this zero line, and you'll get a reversal, which, just based on that move up and this pullback here, probably maybe a move down Monday morning, if that was to happen, 10 o'clock reversal period.
Perfect.
Look for some kind of a turn.
Perfect. So that also means, folks, if you can read between the lines, unless you're a day trader, we're not going to be giving, new swing trades into the close.
If anybody took that Boeing cover half, there's plenty of time to get in. Definitely bring the stop to break even. No loser.
And that's such a good feeling when you're in a trade and trade management mode that, I'm not talking the crazy scenario where it's an intraday halt and it gaps against you, because you can't focus on that. But when you're in a winning trade and it's just a matter of how much am I going to get paid? And you just apply your trade trailing rules, and it's a beautiful thing.
So Florence is asking me about the setup here. So Florence, this has a few things in alignment. So Boeing up at this area of resistance, the prior topping tail on the daily. The hourly was a sell setup right there, close to minor resistance. And then my 5-minute had rolled over and it was just hanging here. These little narrow bars, it was hanging there. It couldn't pop up, and it was a short under this low right here. Actually, I got filled at 74. So everything that we do has multiple, moments in time, patterns, and such coming together. We look at the market and, of course, the market's inability to bounce from this attempt of holding here certainly helped that draft to the downside. Now, could this be, I'm looking at this time of day after 3 o'clock, a little break and reversal. It could happen. I mean, the equity markets, if you've traded futures at any time or any length of time, that they love to have false little moves, just catching people on the wrong side, and then they go back the other way and then go in the direction of the trend. So generally speaking, where stocks trading breakdowns and breakouts work, if you look at a quality setup, equity futures, spiders Qs, they are less consistent with breakouts and breakdowns. It's kind of like the nature of the instrument. But we say anything that we trade, we can use a chart. They all have the same, they all follow the same patterns, but they do have their nuances. Let's see what's doing the worst today. XLP. Wow, consumer staples again. Looks like beer is in a bear market.
What about vodka and rum?
Well, as long as you keep drinking that vodka, Dan, it'll be fine.
But on a serious note, look at STZ. I discussed that today, but see, I because they're just distillery, this and that. They do a lot of liquor, but STZ, Greg, compare it, and it's a deep retracement. I was keeping it on my list for Monday, but that is not in a bear market. Mm-hmm. So is the lesson to start drinking, the heavy stuff and not beer? Is that what the market's telling us?
I don't know about that. Who's not buying chocolate? Oh. While we do focus like it's on the technicals, but since I do also look at into market analysis, I look at this and I go, why are these stocks in a bear market? Look at this. Who's not buying cereal? I mean, these kind of things are supposed to be relatively stable, 72 down to 43. And it looks like it's going to keep going. This Oxy has just been, how do you say about the children, Dan?
That they need disciplining?
The problem child.
Right.
But look, I mean, I will be back to this thing. I mean, it took out the highs. It's been like after this thing. I know it's a counter trend trade, but it's climactic. It traded under the low yesterday. It's at prior resistance. The sector is a little extended. Everything is lined up for this thing to pull back a bit, and buyers, I look at it like these idiots coming back for it again after this move. But assuming this closes with a topping tail, Monday I will be back after Mr. Oxy.
Wow. Yeah. Actually, you know what's funny, Greg? You actually, I don't know if it was on this chart or something different I was looking at, but it's going to be the same conclusion where you said, typically, Dan, it's going to trigger and then it's going to make a new high and then fail. So now you have your topping tail. So under today's low on Monday, and I know it's not proper grammar, but it's more better.
Dan, how did you say that?
I prefaced it. So that's an excuse when you're doing it on purpose.
Guys, Dan told me he was the grammar king in school. He got the award. So every time I write something, he says, hey, that's not the right punctuation. And this and that. And I'm like, all right, Dan, please just fix it.
Right. Right. Yeah, I won the Advanced Moot Court Best Brief Award and a Toastmasters, the Head Grammarian Award.
So Dan, you're like one of those people that used to send me emails that my grammar wasn't right in the article that I wrote that provided these, such valuable gems of knowledge on trading in the markets. And this guy only could focus on the fact that I used a comma instead of a semicolon or something.
I know you're kidding, because I would never do that. I would tell you in person once we were friends, but no, as a customer, are you kidding? Your information it was king.
No, I've really had people send me emails, not specifically about that, but to say like, the punctuation, to read it with that punctuation is so annoying. I'm like, turn it off, man.
Right. Save yourself a headache. Don't read it.
Yeah, I mean,
hey, look at Whiskey Mike. That was wow, that's been on a wild ride. Never mind. Yeah, I had that on a bear gap watch this morning, but never mind. I just see it breaking down here on a 15-minute chart, but nothing to do.
Assuming the market continues, this Boeing looks like it should go the next leg down here. Right. No bounce.
Look at your BMY, still no love.
That was your baby, Dan.
Well, no, you mentioned it the other day, and I said, yeah, I'll watch it because I love picking bottoms on climactics because of the spiked volatility, but I'm very specific of when I enter.
But look at it. It hasn't gotten it. This is climactic, but it hasn't gotten climactic like
Absolutely.
vertical on the 5 minute chart, which they typically do before.
Well, I even want it to be vertical on the hourly first. And the hourly is just steady liquidation. That is a nasty selling trend right there. Nasty. Now see where it tried to have the one bounce, Greg? On the what is date is that? 18. No, to the left more. Left, right there.
Yeah.
So once and see it bounced. And I then would have looked, I would then go down in the 15-minute chart and then the 5-minute chart. But then the hourly wide range bar thereafter is telling me, without even having to look at the 15-minute chart, that it never set up. It was just a bounce and a nasty downtrend.
Yeah.
So, Greg, did you answer Florence on Boeing?
Yes, I did. Mm-hmm.
Okay. John, who did GE yesterday? Congratulations. We were talking about he was talking about selling an out of the money put into earnings, and it was happy to take assignment on the improved cost basis. And I said, absolutely do it. And our discussion was just centered around, do you want to sell the 1 day to expiration or 1, 2, 3, 4, 10 weeks? That's up to you. Yeah, Greg, I sent you the link a few moments ago on Lfin, Lfin, a newsletter guy, and it was a good discussion, and he raised a lot of things in there that he's like, look, he was saying, look, the stock being halted, the people who were shorted and they had a bearish bias have no way to get paid right now when it's halted. And he discussed what that all of us have been talking about, multiple times, which is the long put holder doesn't know what to do. And then, we got exercise today, and the OCC rules say 1 penny in the money is automatic exercise. But he did make a comment, which is interesting, which I didn't know, so I'm just relaying it. It was, because it's new to me too, that I obviously know about the 1 penny auto exercise, but when the underlying is halted, they will not automatically exercise, even if it is in the money. So the $30 puts on LFIN that are in the money, they won't be automatically exercised. He says that the long put holder has to call the broker to exercise it. So, like I've been saying, they don't know what to. If it were me, because of the bad, you don't get halted on good news. The NASDAQ doesn't say, I'm going to halt you for a couple weeks so I can figure out what kind of award to give you,
So did you say it was put to you or not?
No, just pull up LFIN, please. LFIN. It's like 27 and change, right? 28.19. So A $30 put is $1.81 in the money. That would be automatically exercised if it weren't halted. So the guy was just saying, he said a lot of things, and, there were good points. He's like, the people who were properly short this thing can't get paid right now while it's halted because they don't know what to do.
Maybe it never gets unhalted.
No, that's not true because they would just put it to the pink sheets. But yeah, it will open. Maybe not on NASDAQ, but it will open on the pink sheets then if it gets
So if this thing was found out to have been a total scam,
yeah,
they're going to open it to trade.
Yeah,
pink sheet.
Yeah, because you got humans trading it that have to be able to trade with each other. So if they want to trade it at 4 cents a share, absolutely. So, but anyway, my point is 2819, it will not be automatically exercised unless the put holder calls a broker and says, I want to sell this at $30 a share over the weekend. And then they'll do the exercise notice. Now, if I own $30 puts, would I exercise it even though it's halted and I don't know, where it's going to open? And that's where I was sarcastically saying, absolutely I would, because it got halted for bad news. So there's a 99% chance that it's going to gap down, not up. So that was my point. So if it's in the money put, without a doubt, I would exercise it. But what we were talking about multiple times is we're short the $5 puts, $23 away. So if you were long the $5 puts, do you want to sell it to me at $5 over the weekend? Yes or no? I think you're out of your mind to do that unless you have inside information that it's going to open up below 5. That's my point.
No. Too much intrigue for me. When this was, I don't know if the day it got halted or the day before, somebody got an article out there that said they were saying they were short and that they went to their offices and there was nobody there.
Well, it
was lunchtime.
Well, it's probably that hedge fund who, has been touted, when you're, and that's what people do out of self-interest, right? If you're bullish, you're going to get on CNBC and tout all the bullishness to get the crowd to follow you. When you're a bear, you want people to join the bear wagon with you. Let me shut that off. IWM is just grinding lower here on the 15-minute chart.
Right into that gap area we talked about yesterday and this morning.
But that's where's your 1, 2, 3 measurement? Oh, it's the next gap lower. I see it.
No, it was right here. This is what we talked about yesterday. Was this?
All right. Well, I saw another gap. Let me look on my screen.
Well, there's one down here, but this is an inside gap.
Okay. Oh, no. I was looking at, you're hourly. Yeah, right there. No, I get it.
Mm-hmm.
But momentum is down. So I think we're going to have to overshoot and then, wait for buyers to step up. So I'm in agreement with you. Let's get a Monday morning shakeout and then the first or second reversal. If we get it, then we'll, start selling some out of the money puts or our relative strength stocks that we want to buy. KRE, the banks are still green today. That GTSL, we'll keep an eye on. I've been watching this because of, look at this one, SPWR. Remember on the gap day, I said this could be a core because of the monthly. I'll just keep an eye on it. It's, look at that, green 3 days in a row.
Come on, BA. Crater. Snap held up very well. Coming back. We could trade these. It's there. It's too late in the day. I like this little extra push, John, and then the stabilization. But, it's too late. Do you vary to be traded? Dan, that one's for you. Dan is still there. I wasn't following when you said that, Andre, with the question, divergence. You play earning. Twitter earnings. I mean, I won't hold it in front of earnings. It's doing well here. You know, the gap up got sold into today, you know, with the negative market, but it still looks pretty good.
All right, we're getting a new low reversal with some ump here, and it's 339. That could be the low of the day.
Just taking a look at the weekly charts here. Start the weekend review a little early. See how things are looking here. Pretty mixed bag. I mean, look at technology. That top, I give, you know, that topping tail. I mean, I you know, recognize it as such, but off of this double bottom and the way the daily charts look, I want to see if that actually gets negated. And if it does, we should have a heck of a week next week on the long side. I mean, internet looks good. Defense and aerospace looks good. And there's plenty of stuff that looks bad, but industrials, yeah, neutral to okay. Consumer, defensive, okay. Financials, neutral, inside weak. Regional banks, inside weak. This consumer staples, my goodness. Looked like it was going to, you know, was starting to hold. Retail, what was setting up, that topping tail now, we'll see if that's going to go lower. Real estate, looking good. And the home construction, we know there, it's been basing and had been for a while. It was trying to make the turn, and it still might. I mean, just because of one down week doesn't mean that it's going to break. So we'll have to, we always need confirmation on some level. Wow. So this page is not an exact duplicate of the daily wide range bars with the bottoming and topping tails, but here looking at weekly and monthlies, looking for what really may have gotten a clobbering during the week. Surprised to see Apple there at the top. Well, that's sorted by volume, but Mattel, bad news.
Hey, Greg, I'm just looking at this article that's right down the street from you in Hollywood. Margaritaville Resort.
Yeah, I've been there.
Yeah, me too. And the paper says here it was built in 2015 for 147 million, and it was just sold for 126 million.
That's odd. It's a nice. I've never stayed there. I went there for, drinks one night. It was a little whatever, and it was nice.
No, I know it's very nice, and I mean, they took a $20 million hit right there. The seller. Wow.
I mean, they continue to build here, on the beach, and that is, further down the road, so a little less valued area than here, but still, it's like more up and coming and surprising to see. Something must be wrong there.
Right. I mean, that was supposed to be, a big injection to the area of positiveness.
Why?
Yeah, so Dan, I was answering your question there on contract size. Absolutely. If it's, if you, I got to be careful the way I say that, but in my lingo, if Greg hears me say this is a pounding pattern, it just means the odds of success are so overwhelming with a tight stop and all the stars are in alignment. I'll pound it. I'll just keep legging in, and pounding it. But that's rare, And then on the opposite side, when I'm cautious, very cautious, I'll say, you know what? I'm just starting with a one lot. And let me make a comment on that. A one lot will force you to watch it. Like, remember Amazon this morning? I told you I stopped watching it and I missed it. Had I done just a one lot and kept the stop, over the high, which was the plan, then when you have money on the line, even if it's a very small amount of money, it forces you to pay attention. So, and then we have all kinds of layering in strategies, but so Amazon, I could have done a one lot. It wouldn't have stopped out, but don't even do a one lot if there's no pattern there. There was a pattern on Amazon. It's just, it had deep retracement and I moved on. But yeah, volatility, your maximum loss. We teach skills of how to get back on the horse after you've been kicked off it, from successive losses or bad discipline, whatever. We talk about the psychology of having to do that. And sure, that involves, going back to your trading plan, the proper setups, paper trading, and then doing small share size. So all of that is related. You better believe it. Even though I have, I got a 10 lot is just my default on my Thinkorswim. No, if I'm trading the fangs, I don't do a 10 lot. I don't. I do, unless I love the pattern and it's a no-brainer, and then I'll smack it for a 10 lot or more. But if it's a swing trade on those volatile things, no. 3, 4, 5, 6, 7 side contracts. Sure, John. There's absolutely nothing wrong with one contract. Look at Pool, Pool. Nice breakdown on the daily, weekly. Now look at all of that resistance on Pool. That's a beautiful bear call credit spread candidate. But, I don't want to go all the way out to May, number one. And number two, the 150 calls don't have enough juice. It's only 40 by 65. So that's only a third of my 1%. But, credit spreads, you just look for patterns that are short-term tops or bottoms. And it's that simple. And then you just determine how long are you willing to make that bet? A day, a week, or a month? So, when we teach, we try to simplify things.
Here's one. A little bit weaker. The weekly is something was available up there around $39.
Yeah, for this slug, yeah, I doubt we're going to get anything. And they only have Mays and 39s. Geez, 0 by 30 cents.
What about, I know this has already moved a bit. I mean, I don't think we'd find something $10 away, but look at this breakdown in KLAC. And I can find a lot of stuff that I say I don't think it's going to go there, but it doesn't mean that the options are available that make sense.
Well, it coupled with how long, because I can get you the number, but you know the drill. You and I talk about it all the time. Well, the 110s are juicy, but when's earnings? I mean, the
26th.
Yeah, so that's why they're juicy. That's earnings, because these are Mays. They don't have weeklies. Because, we could do a 110, 115, but for the
How about this one? Probably reported earnings today. DGX.
Yeah, nice wide range bar. So we could do the 102.50. There is no, and they only have monthlies, and there is no 102.5 strike. And the 100's too tight. So that's the problem there. Yeah, 102.5 strike would have been perfect.
Car earnings May 2nd, $50.
Yeah, that's a nice topping pattern. Yeah, I remember Carr and Hertz. I remember when those both were getting beat up. Wow, they only have monthlies also. But it's juicy. Wow, it wins earnings?
May 2nd.
Yeah, that's why. Because yeah, the monthlies, the next expiration for the monthlies is May 18. But yeah, the 52 and a halves are very juicy at 80 cents. So I would now say, who was I talking to? John? I would just friggin' pound. Well, no, that's not true. I wouldn't. That's not true because I have 28 days to expiration. So pound was the wrong term. But I would, without a doubt, just done a 10 lot right there. If I could sell the car 52 and a half, 57, and here, I'll tell you what the midpoint is right here. 52 and a half, 57 and a half is 60 cents. If there weren't earnings, I would hit that button so fast for a 10 lot on the 60s. And then on Monday, look to do another 10 lot, another 10 lot. Because the risk to reward of that, now breaking out over all that resistance on the daily and weekly is, I'm confident. I'm confident in that. No, but John, I would on this pattern because even though I go out a month, I'm in management mode. I rarely hold things a month. So if I sell it for 60 and buy it back at 30, I still made 50% of max gain. But I'm just talking about the pattern I like so much for that selling a call, a 52 and a half strike, which is $5.50 away. That's the only point I'm making about confidence of the pattern. But I'm not doing it because of earnings. Yeah, exactly. Well, I like to sell options that expire prior to earnings because if earnings are still within expiration, even if the stock's moving in our direction, like we did in CVX, we had a very nice trade on CVX, even though when we put it on, we said we're intending to hold over earnings. But then we got 70% of max gain without having the risk of earnings, and it became a no-brainer. Take the money. Off to the next trade, and we have no earnings risk. But I would, yeah, so you get the point. So I would not enter car with the, plan that I'm going to close out before earnings.
This looks ugly.
Yeah, but see, isn't ugly a relative term? Because ugly could be beautiful to make money.
We'll see what it does next week. It's at near this low, but the trend is down. Oh, that's a slow mover. Less than a minute.
Yep, that was the low of the day, but still nothing to do.
Mike posted a question in questions with market making a lower high. Is it in a downtrend? You didn't say the time frame, right? But 5 minutes been in a downtrend for a while. Right? So trends are all, what time frame are you looking at? I hope everyone is going to join us next week. So with trends, I'll give you my quick and dirty on trend analysis. Oh, that's an uptrend, higher highs and higher lows. So, and you say, is this still an uptrend? Well, not by definition, because it's made a lower high and a lower low, but because it's still above major support, the low prior to the higher high, my bias is that from an uptrend, because this pattern, you can look at it yourself daily and weekly, you'll find that this is a weekly uptrend and it's pulling back to make the next higher low in the weekly. Getting some nasty feedback again on everything. So when you see the trend matrix in the advisory letter, this would still be in an uptrend, even though it's making lower high and lower low. So if it does this and takes that out, well, I didn't draw that correctly. If it was to do this, and trade under the major support, that will move that uptrend to a sideways trend. If it takes out two lows, even though it's not lower highs and lower lows, it automatically becomes a downtrend. All right, everybody. Hope you enjoyed the time with us. Hope we'll be seeing you next week. And have a great weekend. Okay.